Happy trading greetings. This is Major Macro Markets, Ron William, on behalf of RW Advisory, giving an update on the 15th of June, days after the sharp setback on risk assets. Here we can see global cross asset with equity markets in green, gold in yellow up top, and then the G3 complex in blue. We can see there an unwind in risk appetite, just a minor loss of momentum, but an echo move from the March crash event into mid-June. Now, looking at the trends, tactics, and timing, we have some sharp reversals. This is where this type of charting really comes into its own. Looking from the left side, we have S&P 500 reversing beneath the pandemic gap. We'll look into that in a moment, at 3240, now targeting 2727, so the previous swing low. DAX, representing the European divergence originally, also reversing, but even sharply lower, and that's below the prior support, now resistance, 12,900 level, targeting 10,210. Gold, it's still range bound. Originally, when I spoke about this previously, it was looking like we were going to break that 1662 level, but we're still range bound and potentially going to break to the upside at 1766 or lower. Of course, we must keep in the risk off trade here. If that continues further, then gold may actually punch higher. Oil finally losing momentum at the prior gap levels, and also weighed down by just the general overbought nature and various other overlays we'll go into at the end of this presentation, but certainly suggesting a mean reversion back to $10, having just come under pressure on the $40 mark. Looking at the currency complex, euro dollar has been a pain trade both up and now back down, reversing under 112.60, and certainly looking like we're going to head back to 110.30 and potentially 108.80. Looking at the pound, also falling in line, having reversed down, and the target there is at 121.50. Looking at the equity market space, so we'll have a drill down on S&P 500 and the DAX. S&P 500 V-shaped recovery hits the pandemic gap. Of course, it's a poetic justice in price and time terms, but also a short-term cycle kicked in last week too. And what we see here is that V-shaped reversal became overbought as it stretched into the 76.8, 78.6% levels of 31.15.30, and looks like we're going to head back down to 3,000. Certainly, already we have traded beneath that into 27.90. Watch your space for further downside projections. Looking at the DAX, more of the same in terms of timing, same cycle, same reversal. Now we're closing below the 200 moving average at 12,140, and looking like we're going to break below the 11,920 level, which is the two-third retracement level, into 11,050, and that's the 50% quantum level, the make or break level for the DAX. Looking at commodity markets, gold and oil. Gold, still range bound for the best part of 2 months or so. Last time we looked at this, it was looking like a downside trigger and $100 risk drop. But at the moment, it's still sideways and neutral. Risk on, risk off is really going to matter to the gold market in the coming days and weeks. For now, the risk is to the downside if we break below 1660. Otherwise, bulls need to push much higher above 1766 to suggest the resumption of the uptrend. Oil coming under the pressure we've been looking for some time, beneath the gap at $35.41. Futures market also suggesting further silent contagion for the next 3 months, going into 4 months, sub $10. And we can see there potential for that to happen pretty quickly based on the price dynamics. Looking at the FX rates, euro dollar and pound dollar. Euro dollar pain trade on the upside and now on the downside, and also triggered by this short-term signal, which tends to work best for the currency market. And we can see here it's also managed to hit dynamic trend regression line from March, showing price and time pressure. And now the target is at below 112, 111.48, the 27th of March swing high, with an expectation of a move into the 200-day moving average at 110, and then much lower beneath then. Keep in mind the euro-dollar parity long-term view that is held. There's a separate report that can be shared on that one. And last but not least, pound dollar breaking above the trading range and then back down again, a triple top within that same space, looking like we will push down lower to 122 and 120. If we break below that 2-month range, of course, we could head back down to the crash low at 114.30. That's it for RWA Market Video Alert. Tune in for a rotation onto equities, commodities, and the FX rates. Feel free to follow us on YouTube, LinkedIn, and Facebook. And for those of you who are interested in a 2-week trial, email rwilliam@rwadvisory.com. Thank you very much and happy trading. See you next week.